Hello everyone, welcome back to another video. And in this video I'm going to be going over something that is called market structure demand and how you can use that on the candlestick chart and on the order flow with bookmap to use that to your advantage to get in certain trades that candlestick chart traders could never even see. So right here on the 17th of October on the pre-market, this is a pre-market here in this lighter gray area, you can see all this consolidation and then a small little move up after the pre-market was already very uptrending. You have this consolidation area, which is obviously a place where a lot of passive buying happened and a lot of trapped sellers here that made the market then move up again. So if we're going to come back into this area, I'm going to expect these passive buyers and then aggressive buyers as well to move the market up again. I'm going to expect them to defend this area when price pulls back into here. And that's exactly what happened. And let me show that to you on the book map as well. So market open happened already, and as you can see, we sold off right on market open, and then we started going up a little bit. So let me show that to you on the book map. This is the sell-off, and then we started slowing down a little bit over here. So let me play the book map in like it is in real time for you. So here there's just a lot of selling going on here at the lows, and a little bit of buying stepping in on every pop over here, and especially here. There's not that much aggressive buying stepping in yet. There is obviously some buying stepping in, but there's a lot of passive buying, as you can see with all of these bids over here, heavy bids, because they're red, like a red color. That means they're bigger in size, and they're absorbing all of that selling that trying to push the market down. And that's exactly in the area that I just told you about, where those passive buyers were probably earlier. They want to defend these prices. So as soon as price pulls back with aggressive selling, they are there ready to absorb all of that selling with all these passive buy limit orders. So price stops right over here and starts just consolidating, and it's not able to break down the low. So as you can see, price is rallying up a little bit, and you can see the same exact concept as I just showed you on the candlestick chart. An area of consolidation and then price moving up. That's a level of strong passive buying, which then makes the market moves up. So you can see that same concept right over here, where you have an area of consolidation, you have trapped sellers, you have passive buyers trapping all that selling, and then aggressive buying making the market move up, right? So we want to watch this area for pullbacks with weaker selling that gets trapped once again to then getting long with a tight risk to then take the market to the upside. And now we're just waiting for price to play out and to actually tap our zone, because we want to get this zone tested. Like, we don't want it to test up here. That's a little bit too risky, and your stop loss has to be too big. So we just gotta wait until price pulls back. So price now is right in our zone. Let me slow it down now. Price just tapped our zone. Now all we're looking for is for trap selling and strong buying to immediately come in, right? And you can see that already, because you see here this area of consolidation. That's where people are trying to buy the pullback. Sellers are still trying to break it down, but passive buying is still here absorbing everything as well. So even a manip of this consolidation is very interesting already. Just taking all the stop losses from late buyers that are trying to buy the pullback. And right as we manip this, the selling does get smaller. We tap into our zone and immediately aggressive buying is starting to step in. So this could be a perfect entry already here at the 53s with a stop loss at the 50s, right below the low over here, because you don't want to see this fail. And that's your entry signal right here, 53 with a 3-point stop loss right over here, and a target could be pre-market highs right over here at the 72s. That's a great target. That means you're getting a 19-point move with a 3-point risk. That's just over 6R. That's a 6.3R trade. So let's see what happens. Let's see how it plays out. You're in right here at the 53s where you saw strong buying. You're a little bit of drawdown right now, but your stop loss is right here at the 50s. It's safe. It's below the low here. It's below this low. Sellers are really trying over here, as you can see. There's a lot of aggressive selling coming in here, but they're all getting trapped and getting absorbed by passive buyers. And even here, more aggressive buying is stepping in. That's another entry signal if you weren't in already. And now it's just letting the market do its thing. And there you go. You were in right here at the bottom. You're already up almost 10 points right now. You're up 10 points. This is your signal to go break even, maybe even take a partial. And keep in mind that we're targeting pre-market highs, which are the 72s. And look at that reaction from price having a market structure demand of consolidation here where our passive buyers were strong. The market pulls back into that, and you see the same passive buyers being very strong with, first of all of these bids, and then second of all, every sell-off that happens that tries to break this consolidation range right over here, every time just gets defended and gets all that selling gets absorbed again by more passive buying. And then you enter right over here at around the 53s or even 54s with a stop loss below the low, targeting 72 for a massive move to the upside over here. And let me speed it up a little bit so our targets get hit. And now the squeeze comes from all the sellers that are in pain. More aggressive selling at the highs. See all that aggressive selling at high a day that's trying to bring the market down again. Well, as soon as we start rallying up, those sellers are going to be in pain and we're going to get squeezed out. And there you go. That's exactly what I just said. That aggressive selling at the highs, as soon as they're unable to break that low and they keep getting absorbed by passive buying, as soon as that market moves up, they're going to get squeezed out and they're going to be a lot of pain and they have to close their positions with their stop loss, and that's going to give a massive reaction to the upside. And here's our target. 72s got hit. That's just an overall very clean trade, very clean execution as well. You have your market structure of demand right over here from the pre-market. As soon as price comes back into there, you wait for that same concept, but just on the book map, with aggressive selling comes in, passive buying absorbs them, they're unable to break the lows, wait for a reaction, and then wait for a retrace into that market structure demand with more trap selling and aggressive buying that steps in with a stop below the low, and then target whatever you like or whatever you feel like is best. But for me in this scenario, pre-market highs are quite an obvious target with these equal highs, and that's usually going to get taken out. And don't panic when you see this at the highs. Don't think there's going to be a massive sell-off when there's a lot of volume and a lot of selling at the highs that's unable to actually get a sell-off. That's very likely to get taken out, the high of it. So that's exactly what happened here. These sellers were trying, but as soon as price is absorbing all of them and moves up again, they're in pain and they have to close their positions with a buy position, and that's just gonna cause a bigger rally, and then your target gets hit here at the 72s. So if you like this video, like, comment and subscribe. Leave any comments if you have any questions about the overall analysis or the overall order flow analysis as well, or how I would enter this trade. I'll be sure to get back to you or even make a video about it, and I'll see you in the next video.